In this video, I'm going to be going over an indicator that I made 100% free. There's no upcharges or anything like that. It's 100% free. And click the link in the description below to sign up to get access to it. But we're going to be going over all the different functions of the indicator that I made so that way you can just add data to your trading. One of the biggest things that I've seen in this trading industry is so many people are just going in blind, trading with no data on their side, no statistical edges. And this was something that I believe I could add value to the trading industry as a whole. So that way you can, with whatever model you choose, I don't care if you trade ICT, smart money concepts, support and resistance, you could trade lunar cycles for all I care. This right here can add amazing confluence to any model that you want to use. So without further ado, let's get on the chart and see how to use this. Okay, so the first thing obviously that you're going to do is you're going to add the midnight snap to your chart. Now it's going to be default to some different settings here, but just know this is analyzing so much data. So whenever you change any of these settings or any of these metrics, just know it's normal for it to load and take about 10 to 15 seconds for it to refresh. So that way it's analyzing all the data that you input. But right here, you can see I love trading NASDAQ. So what we're going to be doing is getting into how to use this specifically for what I like to do with NASDAQ. And then at the later part of this video, stick around, I'm going to show you the strategy that if you want to use it, again, this is not me giving you guys a strategy, financial advice, trading, anything like that. But this is how I'm using it to trade every single day, the retracement, and have high probabilities doing so. I'll give you the strategy that's built inside of this indicator, but you don't have to use that strategy. Again, you can use this as a confluence with any way of trading, any style of trading, and you're going to see how to do that right now. Here, it's going to take about 15 seconds-ish to load. There will be a little spinning bar here on the eyeball. Once we get into it, I'll show you. But when you change the settings here, it's going to take a little bit because it's analyzing a ton of data, and you have to be on the 1 hour time frame to get this data, okay? Because the 1 hour time frame, no matter the subscription that you have on TradingView, that's when you're going to get the most data from this, right? It's going to look back that much data that your chart allows. So in this case here, I have the premium subscription on TradingView, and I have 1,032 days or 1,032 sessions, meaning I have like 2.8 years, almost 3 years of data telling me that in this specific time frame on NASDAQ, we have a 67.5% chance of retracing to the midnight open. So that's a really good chunk of data. That's good statistics. And then if I want bonus data, and it doesn't matter the subscription plan, unless you have to have replay mode, obviously, you can go into replay mode and you can then go all the way back to the end of your chart and then click and then start the replay mode at the beginning, and then you get a bonus 2.8 years. So you can get up to like 4 to 5, 6 years of data if you have the highest subscription plan possible. But even if you don't, again, you can still do that to get more data and then just do the averages, right? So if you do 2 replay modes and you have 2.8 years, and say one says 67.5 and the other one says 60, just add them both and divide by 2, and there's your actual average amongst how much ever time or how much ever data you want. So you can see right off the bat, you can get a lot of good quality data. So now what we're going to do is we're going to just explain each of these features so that way you guys understand. So again, it's going to be defaulted to whatever. The whole point of this indicator, okay, is whatever asset you want to trade. You have to fine tune this to the specific asset. This is not a blind time that you have to, that is for everything, right? For NASDAQ, from 8 o'clock to 11, and the reason why I say 8, so please pay attention to this, is it does the candle close, okay? So it's not doing it starting at 7, it's doing it at the close of the 7 o'clock candle to whatever you want it to end at. In this case here, you see if I put 7 here, it's going to start highlighting the session at 8 because it's the close of the 7 o'clock hourly candle, not the start of the 7 o'clock hourly candle. Same thing for the midnight open. So the midnight open is 2300 because it's the close of that 2300 candle, which you can see right here, that starts the opening midnight price. So you see how it starts drawing the line here? That's showing you the midnight opening price, and then it's waiting until that candle closes. So please make sure you're aware of that. That's a very big important thing because I can already see people, they're going to be like, dude, I'm putting 0 here. Why is it doing it at 1 in the morning? Because you have to have it set to the close of this 2300 candle or whatever time frame you're in, time zone. But this is set for New York midnight open, okay? EST. So first one here is we have the table location. So again, you can just move the table to whatever side you want on the chart, so that way it's convenient for you. Session, this is going to start and stop your session time. It's also going to act as like a sessions indicator, so it'll highlight on your chart your trade window so you can see it. You can change the line either dotted, solid. If you do solid, it'll just make this a solid line. Dashed, again, same thing. Very, very minimal things. You can change the color of the line if you want to. The minimum wick ticks. Okay, so this is for the footprints. So you see here, this is what I like to call liquidity footprints. And all this shows you is when this giant wick was formed, whenever price comes back into this area, there's going to be objective buy pressure. Again, could it melt through it? Absolutely. But you can see here, we drew this giant liquidity footprint that it automatically draws on the chart, and it'll stop drawing it when price takes that and then runs with it, or it melts through. So it stops drawing them. So a few you can see here, here was a major bearish liquidity footprint. When we came to it, we sold off, but then we melted through it and it stopped drawing it. So it's a really cool feature that if you want to do pre-market analysis and you want to add the liquidity footprints closest to recent price, you can see what the indicator is pulling for you, so you can visually see it and then highlight over it with just a rectangle tool. And then if it gets too cluttered, you can just turn it off. And that way you give it a couple seconds to update, and then it'll turn off, so that way your chart just looks a little cleaner. And you can just leave that on there, so that way if you're having trouble seeing them, but if you're not having trouble seeing them, if it's easy for you, you don't have to have that. I just have that as a feature if people want to. So this little minimum tick, wick ticks, it's only showing you major liquidity footprints for however many in ticks you specify, right? So if you have it like set to 5, you're going to have a lot of liquidity footprints on the chart. So you're going to have a lot of false ones that are just going to be really weak. But if you have them like what I have it set to is around 90 to 100, 150, it's only showing you those major impulsive wicks that are going to really be prominent on the chart. So if I set to 120 here, it's only going to show those major impulsive ones versus a ton that's just going to clutter up your chart and give you a lot of like false liquidity footprints. So another feature here is you can see, oh, and I have it turned off, so that's why it wasn't printing, but if I have it turned on, it'll show. Another feature is you can just change the color of the footprints. I like to keep it just a normal neutral color because, again, I don't care if it's green for bullish, red for bearish. I just want to see in relation to where we are on the midnight open where it's going to be, and stick to the end of this video where, again, I'm going to show you the strategy that's built into this indicator, again, for free, if you would like to see how I use it, but you don't have to use it that way. So now in the use case portion of this, how it's all going to work is every single day when you have your time window for whatever asset, this is going to give you confluence, again, to whatever strategy you use, because you know in this specific time frame, price has a high likelihood of retracing to this area. So I went into replay mode here to show you a really nice day that we had Monday, which is a couple days ago. This was an actual trade I took using this indicator, using liquidity and market structure. This was a beautiful high statistical day that it played right in line with the probabilities. So what you can see here is I have my window set to 8 o'clock. So I know that if price is hovering and trending above the midnight open here, then we know we have a high chance from 8 to 11, we're going to revisit this area of price because we have a 67.5% chance. Okay, does that mean it's going to? Does that mean it's guaranteed? No, that does not mean that we just can predict the market every single day, but we have a high chance, and the statistics are on our side over 2 years that this has been happening in this window every single day for NASDAQ. And again, you can do this for any asset. So if I know that we're going to potentially retrace to this area, if I'm using this in a confluence with another model, then if I have a short opportunity in this time window, I can now know and use this data in my favor that if I have a short, like let's say I'm trading ICT or smart money and there's a short opportunity coming up here on a lower time frame, then I know that we have an even higher chance of getting to our take profit because we're going to retrace to that midnight open. And vice versa. If I have a long setup, maybe I don't want to take that long setup with whatever trading model I have because in this time window, it could go against us, right? Like if I have a setup that appears here out of whatever strategy I'm using in this time window, I may not want to take it because I have a higher likelihood of getting stopped out just because we're most likely going to retrace to this level. So you can add this to any way of trading, any strategy, and you can instantly have higher probabilities in a time window set for you, customized to whatever you want to do. And in addition to that, it doesn't have to be the midnight open. If say your model is you want to find ways of retracing to the 7 o'clock candle, right? So then you would put 6 because it's the close of the 6 o'clock. If you want to see in this time window from 7 to 11, what are the odds of us retracing to the 7 o'clock opening price, then we'll put 6 here because that's the close of the 6 o'clock hourly candle. And then you can see it's going to take a little bit to update because it's analyzing a ton of data. And then there we go. It's going to draw for you. Once it's done, is it done? So let's go right here. There we go. So you can see right here, it drew the close of the 6 o'clock hourly candle, open of the 7 o'clock candle, and it's giving you an 85.3% chance. So out of, again, 2.8 years of data, we have an 85.3% chance between 7 to 11 of retracing back to the opening price of the 7 o'clock candle. Now, obviously, this is the time window starting at 7, so you're going to probably have a ton of probabilities of that happening because it's so close. But you can see the point of you're not constrained just to the midnight open, but if the midnight open is very important to you in whatever trading model you use, again, you can add this to any asset, any time frame, and build that data for yourself. So now getting into the portion of how do I actually use this, right? How would I use this specifically with my strategy? Well, if I know, and let me go over this too. So we have time, touches, and probability. So the last portion of just deciphering all this data is, yes, we know that 67.5% of the time we're going to retrace. But I took it one step further, and I'm showing you in chunks of the 1 hour candle at what point in the hourly candles of my time frame are we going to see that rejection or that retracement, okay? So again, this is not an indicator that's going to tell you to get into the market. This is not to tell you this is when you're going to take the trade. This is going to give you and arm you with data to, again, back up any of your decisions that you're taking on the chart. And you're going to see, okay, well, between minute 30 and minute 45, I have a 31% chance. I have most of the touches happening, most of the retracements happening in the 30-minute portion of the hourly candle, meaning from minute 30 to minute 44, okay, that third 15-minute candle of the hourly time frame, we're going to most likely experience that retracement. And then you can even just confirm this by going back in time and seeing how many times in all of these hourly candles, because from 8 to 11, that's 8, 9, 10, 11. That's 4 hourly candles. So in those 4 hourly candles in this session, okay, when it gets to the 30-minute to 44-minute of those hourly candles, we have a high chance between that time and the end of that hourly candle of when we're going to retrace. So you can see here at 8 o'clock, so in the first, if we go to the 15-minute time frame, and let's see how many times that's true. You can just literally go back and see this. From 8:15 or 8 o'clock, that was the 0 to the first 14 minutes. So the first 15 minute of that 8 o'clock candle, we retraced. So we were on the outer portion of the data. On 8:30, so you can see right here, so 8:30, this was a statistical day on January 31st. And that's right in line with the more common statistics. This day never retraced, so this was an out of statistic day. You can see right here, 9:30, 30, right? So the 30-minute candle of the hourly candle, that's when we retraced. Again, right into data. Never retraced until outside of the window. Never retraced inside of the window. And I want you guys to understand, just because you have this data here, again, it doesn't mean you're going to specifically, like, you know how to predict the market. Data is data, not guarantees. Okay, so just know that. So on this candle here, we actually retraced, again, 9:30. What happened here? 30 minutes in data. So again, this data is there for you to use, so that way you just know it. Say we were already in a trade and it's getting close to that 30 to 45-minute mark of the hourly candle, the last half of that hourly candle, you have a high chance in this specific setting on NASDAQ that we're going to experience that retracement. So now, moving into my strategy and how I use this and how you can use this as well if you want to arm yourself with data and just trade this way. Again, this is not trading advice. I'm not giving you advice on how to do any of this, but I'm showing you what I do. So what I do is at the beginning of 8 o'clock, so when 8 o'clock is about to happen here, right around like 7:58, 7:59 a.m. EST, I'm finding my local liquidity footprint in relation to where we're most likely going. So if we are above the midnight open, I'm looking for shorts. If we are below the midnight open within my time frame, I'm looking for longs. Because if I know that price is going to come back up here and retrace, I'm not looking for shorts in this time window. Just like, I mean, look at the previous days, right? Like right here. Why would I be looking for longs if I know I have a 67% chance we're going to go back down to this midnight open? I wouldn't. And same thing for if we are below. Look at this. If we are below the midnight open, why would I be looking for shorts here? Because I know that longs are going to be in my favor, right? So it's the same thing here. We're starting out in this session, prices above midnight open, so I'm only looking for shorts. So I need to find liquidity footprints above these hourly candles. That's going to tell me we're going to have objective sell pressure, and then that's going to be my catalyst on the 1 minute time frame to then get into my short and to then get to my take profit or stop loss if it's just an out of statistic day. Again, this will not win. This is not a 100% win rate strategy. This doesn't mean that you're going to get 67% win rates. This means you're going to have a high probability with whatever model you trade. But if you choose this way of trading, you're still going to have a decent win rate, but you're also arming yourself with data to do that. So now going down to the 1 minute time frame, this was exactly a trade I took at 8 o'clock. That's my trade window, and you can see it starts highlighting even on the lower time frame. So at 8 o'clock, all I'm waiting for now, because again, on the 1 hour time frame, I drew this impulsive wick here that's telling me there is objective sell pressure. And all I mean by impulsive wicks is just any wick that's pretty large. Like this, again, there's a little bit of discretion here, but does this look like a major sell pressure area? No. Does this look a lot larger than this? Yes. So I know I have a high chance that when price comes back into this area, we're most likely going to sell. So if I add that in combination with high probability data, that's all I need to take my short. So now in the 1 minute time frame, I'm waiting for a bearish candle to reject off this liquidity and then close below, and that's my short. And my stop loss is using market structure, taking and putting it above a protected high. And what is a protected high? A protected high is a high that made a new low, that shifted the structure in the bearish way, and vice versa for a protected low. If I'm looking for a long, I want to put my stop loss below a protected low that caused a shift in structure. So this right here, if I was taking a long right here, my stop loss would be below this low because this low was responsible for breaking a major high that caused bearish trends. So right here on the 1 minute time frame, this high was responsible for breaking these lows and causing this downshift, this downtrend temporarily. So I would be waiting for a low to break this high, and that's where my stop loss will be. So right here is where my stop loss will be. Vice versa for shorts, I'm looking for a protected high that caused bearish structure to start shifting. This low was never broken from this high, so neither of these highs would be my stop loss area. So I'd have to keep on looking back left and seeing, okay, where is there objective, where is there an objective high or low, or the daily candle, because I'm playing the daily candle as a day trader. So if I can't find a protected high that's local to price and other than me dragging my stop loss way all the way up here, then I'm just going to use the daily candle. I'm going to use the daily high that we have currently because that is going to be my protected high because we're in statistical opportunity here. We're in a statistical window of correcting back down to the downside. So now I'm just waiting for a bearish close, which we get right there. So this was my short at 8:01. And again, I would already have had this mapped out. I'm already calculating my lots and my position size, my contracts, however I'm trading. And this is something that you just have to do every single day. My target is always going to be the midnight open, stop loss with a little bit of breathing room above either a protected high or the daily high. So of the daily candle here. So that was my short right there at the candle close. And then you just let the trade play out. Stop loss or take profit. And I think we had some news this day too, so we actually start correcting just a little bit. But thanks to futures, you don't really get slipped that bad because it got pretty close. But again, the day was still true, which was right there. we retrace back to the midnight open. So this is literally my bread and butter, right? This is literally what happens almost every single day, and you will not find trades every single day. But the thing is, and the most important part about trading is you're not going to have trades every single day. It's fine. It's fine if every single day is not your day to trade. I know some models are like that, and that's fine if that works for them. But for me, I'm fine just waiting for a very high quality setup like this and just taking my time and being patient. So this is a way that you can use market structure, liquidity, and data to then build a great trading model. There's the video, guys. Drop a like on this video if you found it helpful. The link is in the description below to sign up on how to use this. Join the Discord if you have any questions at all. Again, you can tag me and I'll make sure to answer them, or somebody in my team or my pack traders will answer you. Like I say at the end of every single video, I love you guys. Thank you so much for watching. As always, stay grinding on your goals and never let anyone tell you that you can't do something they have never done themselves. And I'll see you guys later. Pack Trade Group.